Chris, I want to start with sort of not the equity hysteria that's out there, but the media angst that's going on right now. How do you define a correction in 2020? Is it down 10%, or is there a new calculus for Gabelli Funds?
This is nothing. Listen, this is healthy. Obviously, the correction is concentrated in a few stocks. Those few stocks happen to have accounted for more than 100% of the gains of the S&P so far this year. So, this is a different correction than certainly we've seen in the past.
Here's a money question for the day, Chris. And when I saw our lineup earlier this morning, when I walked in hours before John Farrow and Lisa Abramowitz, I would want to point out, Chris, that I really went to the heart of the matter, which is how should our listeners and viewers who are not sophisticates in derivatives, how should they adapt to the NASDAQ well, the gamma well? Do they just ignore it?
So I am certainly not an expert on market internals and why the market is short gamma, but it certainly has introduced volatility. It's powered the move up in part, along with a lot of other factors, and it appears to be driving the reduction that we're seeing in futures. So something to understand, be aware of, but at the end of the day, we're looking at the fundamentals of each of these stocks. And as Jonathan pointed out earlier, the fundamentals of those big five stocks have been terrific so far this year.
Chris is just trying to work out the appropriate multiple to pay on some of these companies. Can you just give us some insight into those conversations right now over at Gabelli?
Yeah, that's right. So, in general, obviously, where rates are pinned and appear to be pinned for a very long time, you should be willing to pay a higher multiple for any stream of cash flows. And the question is, how durable are the cash flows of, say, those big five, if that's what we're talking about, and what should you be willing to pay for them? It seems that a year ago, obviously, they would have been at bargain prices. But at this point, the market is making a bet that the durability of that cash will last a very long time, and that they grow, at probably double global GDP growth for the next 10, 15, 20 years. That's a little bit of a harder bet to make.